So, Chris, as a mortgage broker, what's been your journey to date?
So actually, I started out as a stockbroker in the city. That was mid 2000s. Just before the 2008 crash, I sort of could feel sentiment changing. I definitely didn't see what was coming. I didn't have my psychic powers, but I came back and I worked in retail banking. You know, I had a bit of a life lesson that actually money didn't necessarily make me happy. And so I came back and I worked in retail banking for NatWest. And it started by running a little branch in Lymington in Hampshire. So it's pretty easy life. Go in, sit on the counter, speak to the old OAPs. It was an easy pace of life, but quickly got a little bit boring, going from sort of getting up at 4 a.m. to get to London to get home at 10 at night, 5 days a week. Suddenly the change in pace, which was originally welcomed, got a little bit stale. So I then went and worked for Connells, the corporate estate agency chain, who now own Countrywide as well. And I was a mortgage advisor for them. I trained to be an advisor with them, which was a tiny step back on the journey, I guess. But mortgages, I found, was a product that the only product I really found in financial services where you weren't selling a product to the customer, you're actually selling yourself, because they needed the mortgage to get that dream house on that journey of like our British aspiration to own houses. So I worked for Connells for a year. A colleague that I worked with, who was the branch manager, was setting up his own estate agency. So I decided that I would go and start the Mortgage Hut. This is about 2011. And left, and then actually my colleague didn't start his estate agency. Suddenly I had no lead source. I had a pregnant girlfriend, a rented house that I had to pay for. And that was the start of the journey for the Mortgage Hut, really.
Excellent. And how did you find that shift going from Connells with structure to the Mortgage Hut, where you start from scratch?
It's a great question. Terrifying. And probably, if I had known then what I do now, I've had a great career. We've got an absolutely fabulous business with great people, but at the time it was incredibly difficult. I was up at 5 a.m. every morning, going to networking, talking to the florists and the utility warehouse salespeople, just hoping that I could get 1 or 2 mortgages. And actually 6 months in, I went for 2 job interviews, considering going employed again. Got 2 offers, but I stuck with it. And actually one of those companies that offered us, we ended up acquiring in 2016. And the other one we now provide customers and leads to as well. So it sort of worked out, but it was a difficult and daunting journey to go on, like most people who've started a business know. Yeah,
it's quite a roller coaster, isn't it?
Yeah.
So what year did you start the Mortgage Hut?
2011.
Okay, so 2011, so 11 years on.
Yeah.
What does the Mortgage Hut look like now?
We've been through a real journey, because we started as a localised business dealing with local customers. We then pivoted across. We dealt with Hampshire Police, their police federation. We started a brand called Police Mortgages that still runs today.
How did you get into that? What led into the...
Actually, I volunteered for the police. Every time I went in... someone said, "Oh, you're the mortgage guy, right?" And that was sort of what I needed at the time, because I had no customers. And they're very loyal customers. They're great. A lot of the customers that I acquired at that point are still customers of the firm now. So we scaled it out. At the time in 2014, no one was doing Facebook ads to consumers, and you could basically target people based on either their employer, so 48 police forces in the UK, or their job title, police officer, police sergeant, police staff, and then their friends. And so we were able to grow a following on Facebook of about 20,000 people.
20,000
in our first week of really trying to push a mortgage calculator, we went, and we were only a team of 4 people, from 10, 20 leads in the week to 300.
Wow.
So that was probably one of our biggest successes. Then we went on a journey. So we started dealing with smaller estate agencies, putting either me as an advisor or team members into the estate agents, grew from there. And then we acquired a new homes brokerage in 2016. So we entered the new homes market, and that was a strategic purchase because at the time you couldn't get onto Halifax's new build panel if you weren't put on by a large developer. And obviously no large developer wants to put someone on that says, oh, by the way, I haven't done new homes before. So it's sort of that catch-22. So we acquired a company that was on the panel. We scaled that out.
And what age were you at that point?
What age was I? So that was, I must have been about 26, I think. Okay. So I started business when I was 21. Good. I'm now 32, I think. Yeah, and that was a great, we were really lucky because we acquired a load of new homes at clients, some smaller regional developers, some larger national ones, and a lot of those we still deal with today. We have really great working relationships, and that acquisition, although it was like a 6-figure acquisition, it was quite a sizable amount of money at the time for us, was a good strategic purchase that helped us drive that forward. Then moving forward into sort of 17, 18, we started really investing in our website, and we took control of our own lead source because Facebook and Google was starting to get expensive. Everyone had sort of clicked on to that you could generate leads that way, so our costs per client had gone up, and we sort of peaked last year there at generating about 3,500 customers a month ourselves organically without PPC, blended in then with our police mortgage brand, our new homes customers that we already work with, and then strategic partners along the way. So who we are now is a team of about 20 odd employed mortgage advisors who work across the UK. We have a support team of probably about 15 that sit behind them, and we deal with somewhere in the region of about 100 customer inquiries a day, give or take.
Amazing. So your core markets still remain new homes and the Police Federation?
New Homes, Police Federation, and our website. Our website accounts for about 75% of our new traffic. A lot of specialist customers there, so adverse credit, self-employed, people on visas. So like a real mixed bag. But we have sort of teams who specialise. So we'll have a lead on New Homes who has a team underneath him, and so yeah, we're pretty good at working with our key stakeholders, I guess, to develop that side of the business, and long-term relationships is what we're about.
Excellent. So you've had an incredible journey at a very young age, which is brilliant. And it would be really interesting to know, based upon your experience, what do you feel at the moment is broken with the mortgage market?
I guess, the mortgage market, you have to take a step back and look at who the players of the mortgage market are. And they are predominantly, you have lenders who normally are large with old legacy systems. You have conveyancers or solicitors who are working with a relatively out-of-date legal system. You have mortgage brokers who are fragmented. Generally, you have smaller ones who maybe offer really great personalised experience but can't handle scale. And then you look at the larger ones right at the other end of the who have very regimented compliance processes, very regimented systems, no personality or little personality, and that customer experience gets diluted a little bit. So, I think embracing technology is difficult because, if you're a bank, I once went to Halifax and I said, I want to add a housing association to your drop-down text list. For anyone else, it's a 2-minute job. They said, okay, well, it costs us £50,000 to scope that out before we even do the work. Then it costs us the money to do the work. So, Barclays put one button in their app and it cost them over £1 million to do. And then you only have to look at TSB Bank a couple of years ago who did the ambitious thing of trying to re-platform all their systems and change the system and the way that they operated, and actually the bank nearly went under. All their senior management team lost their jobs, and probably their earning potential was heavily dented. So if you're sat right at the top of any of these organisations and you've got 5, maybe even 10 years left in your career,
change isn't encouraged.
Well, do you want to do it? I don't know. Like, it depends on your personality, I guess.
Yeah. Okay. So, and with all that in mind, where's the opportunity? So knowing that those systems are there and they run in a certain way, Where is the opportunity, do you see, over the next kind of 1 to 2 years in the next decade?
Well, I think the key with it is, and we've seen it in sort of the tech revolution. You could almost call it the tech bubble, like at the millennium. We've seen lots of ambitious ideas, great ideas, lots of innovators, but there's one common problem that stops technology working. And it's not the fact that it doesn't work. It's the fact that people don't adapt. They don't take to it. The consumer adoption takes longer. We do what we do. We do what we like. And to affect that change is more difficult. I know that in my career path with the Mortgage Chat, I also spent 3 years out in the Middle East working for a $1 billion tech business, the right move of the Middle East, and I ran their mortgage operations and I did some other stuff for them as well. And it's all about, you can create great products, but unless it has, and normally the products that work the best are the most simple, the simplest ones.
So is there anything at the moment that you'd love to see adopted that just isn't, or what's the major adoption that you feel is required by consumers to enable progress in the process of arranging mortgages?
I think I think it's such a big to reform the whole market is such a big job, because if you look, the number one thing for us as mortgage brokers, and I know for developers and estate agencies we deal with, actually it's not the mortgage lenders. They're a bit of a pain, but ultimately they lend their money, so they have the right to ask the questions. I think the thing that's the most frustrating is our property market and the transactions and how long it takes for things to go through. If you look at, like, if you go and buy in Australia, it takes you 2 weeks from offer to get in there. Here, and we had to remodel all our financial forecasting, because actually, whereas before it would take us 3 to 4 months for a transaction from submission to fully completion, to the completion and getting paid, we had to remodel it 5 to 6, sometimes to 7 months. We got to that point where we're actually seeing customers' mortgages offer expire because the transactions take so long.
And is that led by the issues with the housing market?
Yeah.
So the planning process, the build times, or are there other issues on the sort of arrangement side that cause?
I think it's actually, like, the developers do a very good job. Lots of challenges over the last couple of years with labour shortages, with material shortages, with supply chain challenges. It's a difficult business to manage, and lots of fluctuation with costs. I think really it is the legal process that lets it down. You put these chains together that are long, are unconfirmed or untried. You can speak to people and they'll say, "Oh, we should use blockchain to do this." Well, you for sure you could use blockchain, but in reality, you could use much more simpler technology. But it's about creating
always the laws, isn't it?
Some incentive in the marketplace, because if you are a solicitor or a conveyancer, a developer, an estate agent, to fix these problems costs money. It costs money, it costs time, it costs effort, and you really need the government to say, what, we could speed this process up, make it easier and at the end of the day, it's going to drive the economy forward. So
where do you see? So we live in a world now where you can order food from your phone and it's there within minutes.
Yeah.
It's not inconceivable that the housing market will get to that point at some point. If technology aligns and the barriers are dropped, then where does the position of a broker sit in that process?
I think I think you have to look at again, looking at adoption of technology and where we're comfortable as consumers. If you go back, say, 5 to 10 years ago, robo advice was the number one word in the financial services industry. You could take, actually, your phone, an app could give you investment advice that an IFA could. Your financial advisor, they could tell you what funds are going to be the best ones, and actually they can do it at a fraction of the cost because it's an algorithm. Well, that's great. Like, honestly, what a great idea. But why didn't it work? Because as consumers, we're not ready to adopt that. We don't have the trust in that. We still prefer for someone to come and sit on our sofa or to sit on a Zoom and say, "By the way, Simon, you've got this pot of money that we are going to invest and we're going to put it here. And this is why we're going to put it here." And you're willing to pay that advisor maybe 1-2% of your investment, whereas you could pay a bit of tech, a bot, maybe 20% of that.
I suppose the interesting there is that's money that you own. And I think people are a lot more protective around money that they own versus money that they're borrowing. So an IFA, you want them to sit in the room with you and give you guidance and look into the whites of their eyes and trust them.
100%.
With money that you borrow, I wonder whether it's different. And actually people think, well, all that really matters for me is that it's the lowest cost with the best terms.
Yeah, 100%.
So if we end up in a marketplace where the process of purchasing a home becomes far more transactional and remote, how does your role in the process evolve?
It's a very good question. I suppose you have to look at how the mortgage market operates. Lenders have, in an affordability model alone, they'll probably have 150 different variables. Then they've got their criteria that sits behind it. So they'll be happy, some will lend on a new build flat at this level, some won't. Some will lend to customers who are from the EU, some won't. Some will lend to self-employed with 1 year's accounts, 2 years accounts. The 2 years accounts might be an average. It might be the latest year. It might be the lowest figure. What happens at the moment is you have the high street lenders who will set their stall out on who they want. And they will drive their customer acquisition based on cost, because they do volume. They can acquire customers in volume at the right price. So margin is generally a lot slimmer. Then you look at the lenders in the tier 2, the Kensingtons, the Precises, people like Bluestone, Paragon. Actually, they can't compete on price. They'll generally securitize their money, so they borrow it from investors. Where they lay out the stall is based on niche criteria. So, someone like Kensington will say, you know what, we don't care about adverse credit if it's over 2 years old. And there'll be other lenders who will say, you know what, we only need 1 year's accounts, or we're happy to use this figure rather than this figure. So at the moment, the mortgage market is very difficult to understand. There's over 90 lenders that we deal with, and there are more, and 12,000 products in the market. So I guess until you get some consolidation and some standard processes, because customers are so variable, because, if you take a customer and you think, well, their income, how do we verify their income if they're self-employed? Because I can say I'm on 100 grand a year, but actually when it comes in, that's my turnover. I'm actually on 20 grand a year. How do we verify? And so I guess there's room for the vanilla customers to embrace tech more. And if I was a CEO at NatWest, HSBC, Lloyds Banking Group, that's probably where I'd be trying to drive it. Let's try and funnel as many people through automation, get the brokers out of the market. I guess it's like business lending now. There's still commercial finance brokers. Why do you need them as a business? Because you've got a bank manager. They can provide a product. It's because there's always going to be complicated customers, and that's where a broker really comes in, and that's where the value of a broker really comes in for consumers. Our customers, because we deal with niche customers on one side of the business, they're a lot more loyal because they don't tell us this, but they've probably already been to NatWest or HSBC and they've been told no. So actually they're just grateful to get a mortgage. And so I guess vanilla customers, technology should and hopefully will evolve. The challenge is legacy systems with banks to make that happen. For the more specialist customers, I think there's always a place in the market. And they're the ones that actually, if I was an estate agent or a house builder, they're the ones that are going to make that 5, 10, 15% difference on getting more sales, especially in a more challenging market.
It's a really interesting observation, because I think from my point of view, in the early days of starting Antler, I had that very challenge of, well, I haven't got years of accounts and my mortgage is up for renewal and I need to do something. And actually leaning on a broker who knows how to tick which boxes and which, what the requirements are ultimately of different lenders was incredibly important in that situation. And I suppose that's never going to change. Ultimately risk profile is still there. And I suppose, to an extent, artificial intelligence and machine learning can kind of understand like profiles, but there is still that need for a human to talk with a human to say, well, this is the process, and guide them through it. And where buying a house, I suppose, is still a very personal process. Yes, the metaverse is here and we've got virtual tours and all of that, but nothing beats going and walking around the final product. And I suppose to some extent, where it is such a large purchase, you're putting a lot of your own money and you're taking on a lot of borrowing, to have someone alongside you in that process that knows what they're doing and is going through it with hundreds of other people gives the individual that confidence. So I suppose there's that element. But from a so coming back to sort of the house builder element,
Yeah.
what makes the Mortgage Hut unique? So when a house builder deals with one of your brokers versus your competitors.
So I think there's two different profiles of our competitors. One is large-scale telephone operations where they employ the advisors. It can be, by the way, there are some great companies out there that do a really good job, but it's the first thing that I'd say. But it can be a bit impersonable. Large corporates, you don't get that relationship. On the other side, you've got the self-employed model where they'll all be self-employed. It's like herding cats, I would say, trying to get them to follow a process. Do it. I guess our team, we've been 12 years. Most of our team members, we have a very good staff retention. We treat them well, and they're as motivated as I am. So in a increasing market, I guess, that we've seen over the last couple of years, a broker's job is not really as important because, you can sell off plan 12 months ahead, 18 months ahead. One of our developers sells off plan 24 months ahead up until recently. Where a broker's really good is when you are starting to try and think as a managing director of a region or a builder, how am I going to maintain my comparables? How am I going to maintain it across the site, ensure that actually I don't have down vals that are going to affect my overall ability to sell all of these at a set price? And we have relationships we're large enough to deal with the surveying firms, the panel managers, to be able to understand, who we should put in there, like what company, which lender we should apply with to ensure that this this panel management company goes in. If they get a down val, we can be the ones that deal with it. We don't run back to the customer and say, oh, by the way, you're paying over the odds. We can look at it methodically and say, okay, well, actually, look at the comparables. I think that the surveyor's been a bit harsh here. We'll instruct a second survey, which some lenders allow, a second valuation to be able to see if we can maintain that price comparison. And again, it's like when you have footfall and right move inquiries for new builds, like we're seeing across estate agency, are going to significantly drop. And so as you get the inquiries through, whereas before you get an inquiry for someone and you think, oh, they're a waste of time, let's get rid of them, because actually I've got 5 other people I can sell it to. Now that person who might not be mortgageable right now, who you might put to your existing broker and they say, oh, you know what, it's not going to work. With us, we have that can-do attitude. They've got adverse, no problem. We've got adverse lenders. They're just self-employed. They're a contractor. They're this. We're there to solve the developers' issues, to sell more houses at the right price. And I don't think that there are many companies. I know of some, and I'm proud to be associated and a colleague of theirs, but I don't know of many that are that driven and that determined on every single case to make it happen.
So, and at this point in time, particularly in the new homes side, there's a lot of unknowns and uncertainty out there. What are you seeing happening at the moment, and how are you adapting what you do?
Well, so I guess what we're seeing, so half of our business is made up of customers who we have already done a mortgage for, who we will generally fix the rate after a 2, 3 or 5 year period. So those customers we're seeing come a lot earlier to us. They're a lot more concerned about rates, cost of living, and they're looking to get some peace of mind there and some advice. Some of them are happy to go on to trackers because they perceive that actually there will be a peak next year and then it will come down. Others are looking to fix for longer for that certainty. So that side of the business is very busy. On the other side of the business, where we deal with purchase customers, either via our own website, via estate agency partners or new home businesses, definitely lead to reduced, probably by about 75% for most, I would say. So it has been a very big shift and a very quick shift. And we have been an industry who have come into challenges like Brexit, COVID, and we have, I know, and I'm speaking personally, being concerned about the implications of that. And we've come out smelling the roses. The stamp duty holiday absolutely helped us. The pent-up demand of COVID, people looking to move and get an extra room, all of that played into our benefit. And the key point was that the credit markets didn't contract at any of these points. In 2008, the credit markets contracted. And so that meant that actually the whole foundation of the property market, a lot of the people who were buying were completely removed out of the market instantly. Now we saw a bit of a contraction, or a shock, if you like, when the base rates started to fly up. Lenders started to remove products and price aggressively. So I think we're in a new world, is the truth. I still, when at this point when we record it, I still speak to colleagues in the mortgage industry, and they say, "Oh, it's been a bit quiet for a couple of weeks, hasn't it? Looking forward to it picking up." And I'm thinking, well, if I'm honest, I think this is a new way of living. But with this comes opportunities for sure.
And those opportunities that are ahead of you, without giving all your secrets away to your competition, what are you, as the Mortgage Hut, looking to do differently?
Well, my role within the business is I oversee the advisors, the salespeople, and I deal with the key stakeholders, and I'm in charge of marketing and developing the leads. So I would go to our board meetings up until a couple of months ago, and I would say, I've got this great new opportunity, or I've got this great idea to drive more customers into the top end of our funnel, more customers that we can help. And my colleagues would say, "Look, Chris, we're already so busy. We don't need any more customers." And so my role's been relatively boring, if I'm honest. And so
is that why we've been busy opening pubs?
Well, that's it. Yeah, doing hospitality. Now I'm thinking, I might have my hands full here. But actually, my time was split probably 4 days a week on our other investments across hospitality and other things, and 1 day on the mortgage business. That's flipped in the last couple of months, so now I'm 4 days a week on the mortgage business, 1 day a week just overseeing the management teams that run those. And so there's opportunity just to go out there and deal with our existing stakeholders that we work with, because I can hand on heart say with the housing associations we deal with, the developers that we deal with, haven't gone out and said, "Oh, by the way, Simon, I'd love another region," because I've been happy, they've been happy. Now I'm in a place where I can go, "Look, actually, I think we can take more. I think we can do a better job than you're probably getting." And as I say, definitely from the developers that I've been speaking to that we deal with, they're saying they see exactly the points that I'm saying, which is, whereas it's been like, "Look, it's very similar to our business model. Look, we've got loads of opportunities. Let's just sell to this, and sell to this, and move on. Let's keep going, keep building." Now that flips, and it's like, we don't have as many opportunities. How do we absolutely maximize every prospect, either now when they're in that sales suite, or when they inquire on Rightmove, or get them into a position within 12 months to buy one of our products? And that's what we do for our customers. And so that's, the opportunity is really continuing to nurture relationships, prospect new opportunities. It will be harder for sure for a lot of people. And, in our industry, mortgage brokers will starve, because in 2007, there were 30,000 brokers in the industry. In 2011, there were 7,000 brokers. Okay. And so that type of consolidation is probably coming. I'm speaking this morning already at 6 a.m. I was WhatsApping some of the smaller brokers that I know, they're already finding it more challenging. And so, but as I said to you, marketing, we've looked at our budgets, we've cut out non-essential costs, but actually I have budgeted 50% more for marketing, because that's where it needs to be spent to continue to drive. And actually, with these times, you generally come out a leaner, more profitable business into the good times, and that's that's what we all have to look forward to, I guess, without sounding too negative.
No, definitely. And I think, so you touched on kind of customer journey.
Yeah.
So how do you work with house builders in times like this, where leads perhaps are far and fewer between? How do you work alongside house builders to make sure that who is walking through the door is given the best possible journey, and the best possible advice to hopefully enable them to become a purchaser?
Well, I think you need to work with your partners to actually make sure that what you're offering fits their customer journey. So if I look at someone like Berkeley Homes that we deal with, who are absolutely fabulous, the product that they build is absolutely a premium product, the Boulevard living experience. And so it's important that our customer experience that we offer them reflects that premium product. Whereas if we look at, say, for example, a housing association who also offer an incredible journey but have a very difficult difficult job. They'll put 5 units up in a town and they'll get 100 people inquire who want shared ownership. They don't want us to spend an hour and a half with every customer, like explaining the pros and cons. They want us to fill out a government mandated questionnaire that covers off if they qualify for shared ownership and allows them to be able to prioritize. And they want that done with speed. If 20 people come in this morning, they want it by this afternoon. So it's about understanding what our partners want, tailoring that experience. We're a business enabled by tech, as you would expect from someone that worked for $1 billion tech business, so we can tailor our experience, we can take customers directly from people's via API hooks directly as they're registered, as they come in. We can run we can run Zoom workshops, we can be there for launch events, we can run staff training to help upskill their negotiators. We have an onboarding team, so before we've put in one of our team members to sit in the office to call through the prospects to try and nurture some more of the opportunities. I think it's just about, and that's where we are different to the large corporates, in that we're able to go in, map out what that customer journey looks for their customers, and then make sure that our journey mirrors that.
And where do you see, so looking ahead to the next 10 years again, and current regulation, where do you feel that regulation is holding the sector back?
I actually thought long and hard about this, and I think if you asked me this a month ago, I would have said a different answer, but you only have to look at how cryptocurrency and the exchanges have come out in the last month, where you've got one of them who have 9 billion of liabilities and 1 billion of assets, and they've been using customer funds to make very risky bets. I suppose regulation, without sounding like a bit of a stickler, I guess regulation in truth does offer a lot of consumer protection. And really, in our industry, whether you're buying a new build property or whether you're taking a mortgage, consumer trust is really important. Your customers who are selling properties, people are buying from because they know that they're buying something of quality. And it's similar with financial advice. People know that they have the same level of protection using a broker, if not more, than going to the bank. So it's important that we don't erode that by pushing heavily like execution only of mortgages, because that's how we ended up in the problem in the 90s with mis-selling of mortgages, where banks could just say, "Oh, what do you want, Simon?" And you pick the wrong product. They go, "Great." And then 20 years later, you realise you've got a mortgage that you thought was repayment that's only interest only. So I think regulation does hold back some adoption. I think technology holds it back as well, in that you have a lot of technology that's built by people who don't understand, the amount of tech pitch decks that I've looked at, and they start the same way. They say, "I was buying this product and the process was broken, and so I thought I'd just do it myself." And they don't actually understand the intricacies of like how something, and regulation being a key thing of how it actually works. So, I think regulation, I haven't really answered your question, and I appreciate that, but regulation plays an important point. I think regulators a lot of the time are slightly too cautious, but I suppose I sympathise them, especially in a market like this, why they are cautious. You only have to look at, say, Neil Woodford Fund in Hargreaves Lansdowne, which imploded there, and a lot of retail investors had their fingers burned, and that was regulated, and it was like you do have to remember that when push comes to shove, a lot of the customers that we're dealing with don't have a clue about the product that we're trying to sell, so it's just getting it right.
And so those pitches that you've had people come in and pitch tech solutions to you. Have you ever, are there any like Dragon's Den scenario where you think, "Oh, pants, I should have invested in that one, or should have taken that one on," or are there any that have really stood out to you?
No, I think when you have a tech business, you start with a viable product to try and get to market, and you start with this vision and this journey of what you're actually going to try and deliver. And as you roll that out, you adapt that to what actually the market wants. So if you look at robo-advice and digital mortgages, what is actually that journey? Because it's sold to us that actually you can do something on an app or on a website, and it's seamless, and and a lot of it's smoke and mirrors. A lot of it is actually the top end of a lead funnel. Getting the customer further down that funnel before humans start to before employees start to take over that journey. Do I think we'll get all the way to the bottom of the funnel at some point? For sure. But I was telling people 10 years ago that I would be out of a job in 10 years because no one would buy a mortgage from a mortgage broker. And I can tell you the industry has probably moved 1% towards where it needs to be in 10 years.
So things like, was it robo-advice?
Robo-advice.
So where you say, you sort of referenced earlier that you work with house builders to give them the advice that they need and their customers. Do you see a kind of place for AI and for, I suppose, self-help advice in your process? Or is it always human-led, and will it always be human-led?
I guess I'm still a little bit on the fence with customer nurture journeys. I think there's a lot of products that are sold about nurturing clients. I think it needs to be done properly. So if you look at the house buying process, if I was a house builder, I get the data in. If I can hook them in using some type of funnels earlier so that I can nurture them, great. It's how you nurture them with there's no point in if you haven't got quality content, a great message that you're trying to push out. But I do think technology, the primary in our industry, until though we started the conversation talking about how the legal system's broken, lender systems are legacy. I think up until those fundamental and key points are sorted, actually what technology is really good for is to put customers into the funnel, to nurture them, to be able to use that data to see who's most likely to buy. You can see if they're opening your emails, if they're clicking through and reading 4 or 5 pages, they're probably the ones that you want your salespeople to be inviting first to the launch of your new home, of that new sales suite. It's then about, in our business already, we use an app that we get the customers to download when they initially inquire on the website. That app allows bio, ID and V, so they take a photo of their passport themselves, it verifies them, it hooks into their own open banking. So by the time that they speak to an advisor, if they want to, the advisor has them fully verified. They have their bank statements with their income that's going in there, with their outgoings. So they're already, what that technology has done is it's moved the customer further along that. It's created efficiencies, and it's probably improved that experience and the likelihood for them to buy.
So 10 years ago, the Mortgage Hut was a very different business.
Yep.
I suppose back then you wouldn't have defined yourself as a tech business. Looking forwards, do you feel that the definition of you as a mortgage broker will become more a tech business that happens to be a mortgage broker?
I think we're probably a people business that uses tech to enable us, is the truth. And I haven't ever said that before, and I think it sounds great, by the way. If you look at my LinkedIn, it's probably going to be on my LinkedIn title soon. But, I think the common theme from what we've discussed is that there is tech that does a lot of what people need to do now. And maybe in the house building and in the mortgage business, people still it isn't there. But, if you look at tech platforms that have come out in property industry that have started saying, this is our model, it's completely different, most of them end up morphing into the traditional model. And that's partly, I guess, due to the fact that they don't have deep enough pockets to go until people do adopt and change, and partly because people don't want to change right now. It doesn't mean that it's a bad idea. So, I think we're going to continue to be a people business, that sells on our experience to our customers and our stakeholders, but where we try and embrace tech to make the actual journey experience, the back end side of it, as efficient as possible, because we can run our businesses better using tech as well.
It's been great, Chris. Really good to chat. A lot of value in what you said, and I think we're going to end the conversation by just asking one question. So, you're going to have a viewing of a house. Anyone can take you on that viewing. You get an hour with them. They're going to give you the tour. You can have an hour chat with them. who would you pick to do that viewing? So they could be famous or someone personal, and why?
Well, I know already because I have like a man crush on Will Farrell, which no one sat in this seat's ever going to say that again, okay? But I probably relate to him being as close to me in the real world. I think he's very funny, quite I think a very interesting person. But he's great, I think, and I've read a lot about him actually, and he does a lot to support communities and new talent and
so would you have him as Will Farrell or as a person that he's played as Will Farrell?
That's so like
like Step Brothers, Boats and
the other guys, when I was in the police, people used to say I was like Will Farrell out the other guys. I don't know. I'd probably have him as Will Farrell and then try and like encourage him to play as many people during the time that I see him. So
great answer.
Yeah.
Good man. Well, thanks very much for joining us.
No, thanks for having me. It's been a pleasure.